Hey, what's going on, party people? It is Rags to Riches, and I hope you had a wonderful weekend. I'm here with you today to give you a crypto market update, to show you the portfolio, some of the mining income that we've received, and to talk about Chainlink, one of the alternative cryptocurrency projects that I'm investing in. Great news for the crypto army. It has gone up by over 50% in nearly 2 weeks, so we've made a great trade on that. But this is just the beginning for long-term profits, so we want to get into the details and let you know some of the exciting things that have happened over the weekend since we have last talked. On that note, let me pull up my handy-dandy Brave browser here. I actually wanted to put a pin on this for a minute. Brave is a really interesting browser. It is based off of Chromium, developed by the same people who made Firefox, and you can actually get paid out in cryptocurrency by using the platform. You get paid in a token called the Basic Attention Token. It also has some security measures which many other modern browsers do not have, automatic ad blocking added within it, and then all of your favorite Chrome extensions that might work in Google Chrome or any of its other derivatives also work on the platform as well. As you can tell, it's going to be a little bit of a slow morning today because I am very tired. Oh, God. I still need my coffee. There's no energy drink today for me. But, yeah, as you can see, the portfolio has done very well in the past few days. On the 24-hour mark, we are up by, called about 5.19%. At the peak earlier last night, about 6.8%. And on the 1 week chart, tapping a clear 14.62% gain at the peak and called about 12.98% for the 1 week as of right now. I think compared to regular equity market returns of 7 to 10% on an annualized basis, meaning on 1 year per return, 12% in a week is not too bad. This is part of the reason why I invest in cryptocurrency, because you have the potential to have massive outsized returns because the asset class is underinvested, misunderstood, and underallocated by institutional investors. And the good news is, as a retail trader, we get the chance to be here first. But before we get into some cryptocurrency news and talk about some of the returns in more detail that we received over the weekend, excellent news for your boy. We got some more coins that we can stake onto our portfolio. So, over the evening, my iApollo SE Mini Plus miners generated about $5.33 in passive income. Going to be investing these into the respective altcoins in the portfolio, about $1.06 per each coin, per each purchase. And as is per standard, as you guys may have begun to piece together from the videos that I've done so far, sorry, just doing a little bit of a morning stretch. Got to stay limber and mean and lean for the crypto bull run we're heading into. Essentially what I do is I have price targets for each one of the assets in my portfolio. By price target, I'm not referring to the underlying asset's price, but the allocation from a dollar perspective that I'm willing to put into a respective project until the portfolio reaches a specific price. In this case today, looks like we'll be buying some Kava, Ethereum, and then VeChain. So, actually, let's see here. The balance as of today for these assets is 152, 157, 158. Looks like we're actually just going to be buying all Kava today, which makes my life a little bit simpler given less fees and less trading needs to get done. And Kava is a high yielding project, so I'm kind of cool with that. Because again, the goal of this portfolio is to mine Ethereum Classic and Zilliqa, then to stake these projects, or stake my rewards into projects that generate passive income, such as Kava. What the heck? And that is strange, because I actually do have a sufficient balance. Let me refresh this page here. A lot of web development, I think, needs to happen on the Binance website, but they do offer the best crypto custody platform that I see, so I'm going to continue to use it. Huh. Now that is just the darndest thing. Okay. Interesting. All right, so we bought 8.9 Kava for the day. Getting back into what I was saying, yeah, the point of the portfolio is to mine cryptocurrencies, specifically Ethereum Classic and Zilliqa, then immediately liquidate those and diversify into altcoins that I think have a better potential for returns. Of course, and all the while, I will be buying Bitcoin, put that into my cold storage wallet to try to become a whole coiner. But for the rewards that I get that are diversified into altcoins, those go directly into staking protocols to then generate some additional passive income to compound my returns to help fund the cost of the mining operation. And then, of course, so we can escape the rat race, because the purpose of this channel not only is to be educational, entertaining, and just fun for all of us to, take a moment away from our specific lives and all the stress and nonsense of our day-to-day work, and to think about something fun, to make a little bit of money, and to perhaps learn something while we're doing it. So, we just bought some Kava, so step 2 in the plan, as is standard, is to invest Kava into the staking protocol. And good news for your boy today, it looks like we're getting a 44-cent raise, which means, you know what that means, we're going to Ibiza to go to the clubs and to party with David Guetta and all the good people out there. Yeah, so it looks like we will be staking into Kava, which is exciting. Get to see some additional rewards heading into the week. I usually get my rewards for these coins on Wednesdays. All right, and as you can see here, I think now that I've been staking for a little bit, I can start to tell you a little bit more what the passive income looks like for these portfolios. Looks like since I've begun staking these projects, I've got 66 cents of Kava in rewards, 7 cents of VeChain paid out in the VTOR token, $17 of Polygon, 29 cents of Fetch AI, call it $67 of Polkadot, and 4 cents of Ethereum. Now, are these staking rewards going to be life-changing at today's current prices? I don't really think that's going to be the case. What I do think, though, is that when you invest over a long period of time, continue to compound your returns into high-quality assets, make sure you continue to do your bottoms-up fundamental research to make sure that you're investing in something with underlying value, that over time, the investment community will come around to see what you see with an individual project, begin to put capital into it, and then that's going to be where you see the potential for massive outsized returns. And to give a little bit of color and a little bit of light to how all that works, let's actually go into my wallet and show you what the 1 week returns might look like for some of these tokens here. I probably can do a better job of this on the phone version of the app, because it doesn't really show you net returns here on the desktop website. But I think to this end here, let's actually go over to the news for the day. Chainlink. Chainlink, as predicted, has finally broken out of the price channel from hell. I'm actually going to go to the all-time chart here. So as you guys can see, Chainlink is per CoinMarketCap opened at a original price of 45 cents in 2017. During the bull run of 2021, we saw a peak price of, call it, about $52, and then we've traded all the way back down to, what is this here? About $5.4 towards the trough of the bear market in 2022. And for all of 2023, Chainlink has been stuck in a price channel from hell between, call it, about 9.5 bucks to, call it, about 5.5 bucks. Tried to break out, could not do it. Tried to break out, could not do it. Tried to break out, could not do it. We've been stuck in this channel for essentially all of 2023. But recently, and this is in part due to recent price action we've seen from the underlying Bitcoin network, the Ethereum network, as well as some of the regulatory clarity coming out from some of the SEC's lawsuits, has allowed Chainlink to go on a bit of a tear. So going out to the 1-year chart, we can see here that we've finally broken out of the price channel. There is a breakout over the past few days. Chainlink has essentially returned 30% in a period of like a week, and it has been really interesting, really fun to see. So yeah, it's just been 3 green candles, all massive returns. Not really a lot of fundamentals for this outside of just finally technically breaking out of the price channel. For those that aren't very well versed in technical analysis, and I'm no expert in my own right, but I know just a little bit, enough to be dangerous. When you're looking at any underlying security, prices, historical prices, are an indicator of where price can go into the future. As you can see here, Chainlink has traded in this range-bound position, as I had mentioned before. And every time we hit a lower bound called around $6, there was oftentimes a big increase in price because people thought Chainlink was worth more than that. There's a retest below there, but people continued to buy back into the project. See a big increase in price. There's a breakdown, setting a newer low, but again, undervalued, so people bought up. Again, this price level, about $6, was respected. This time we finally broke out above these recent highs, and now we're getting to see some of the fruits of our labor, some of the returns that have been in the project. And the price chart has just been phenomenal. So in the near term, do I think Chainlink goes much higher than this? Well, I think we're very above moving averages. MACD and RSI are showing a little bit overbought, but in the longer term perspective, I don't think $10 is the quote unquote correct price for Chainlink. Of course, that's going to be subject to market conditions and what people are willing to pay for it. But if this is truly a breakout of this longer term trend, then I definitely think there's a potential for at least us to retest $17, which would be called about a 1x return, 100% return from current price levels. And then should we be able to break past beyond there, we have another price level of $25, another price level of $30, between 35 and 36 for another price level, and then we're testing out previous all-time highs. So yeah, Chainlink is on a tear right now. Definitely some potential for returns. It's not too late to buy into the project if you're looking for a trade here. Me as an investor, I'm looking towards the long term, and I think when I look at the logarithmic chart, the chart has always been extremely bullish, just looking for price stability, consolidating for the past year, and now we might have finally a chance to break out, which is very exciting. All right, so to get into some of the news that we have for the cryptocurrency market, Morgan Stanley believes crypto winter is over. The Bitcoin halving will kick off the new bull run. No, you will not get my email. Getting into the article here, Wall Street giant Morgan Stanley believes that crypto winter is over and Bitcoin's next halving will kick off a new bull run as it has in the past. Morgan Stanley analyst Danny Galindo. You know, I think it's kind of funny that like in the financial sector, institutional investors, people that have billions of dollars will listen to financial analysts that are, you know, candidly, generally speaking, between the ages of 22 and 30 for investment advice for billions of dollars. Now, when people say financial analysts, of course, people can be more senior in a company but still have the function of an analyst, and I would much rather listen to like a portfolio manager or a hedge fund principal or a private equity principal to better understand what their thoughts are on the market. But if we're going to be listening to analysts for allocating trillions of dollars of capital into the economy, may as well listen to our friend Denny here. So Denny thinks that signs indicate that crypto winter's Bitcoin cyclical bear market decline may be into the past. That might be the case, but getting into his thoughts here. Historically, most of Bitcoin's gains come directly after a halving event that occurs every 4 years. Yes. Let's actually quantify this, right? So I can kind of break down what he means here. Bitcoin is a proof of work cryptocurrency protocol. This means that computers, the same ones or similar ones that are generating Ethereum Classic and Zilliqa for me, are actually validating, making sure the transactions that are happening on the network are true, and then publishing that to the public ledger. When they do so successfully, they get paid out in Bitcoin. Now, the halving is referring to the rate of return, the amount of Bitcoin that is actually going to be generated given to someone that is validating these transactions at a given time. And one of the interesting things that we've seen about Bitcoin is that about every 4 years, when the halving rewards, or when the rewards for validating these transactions actually gets halved, we see a large increase in price. This is in part due to the fact that there is relatively consistent demand for the underlying cryptocurrency blockchain at any given time. And then when you have a decrease in supply, there is a supply shock, which then subsequently leads to an increase in prices. People price in the fact that there's less cryptocurrency, less Bitcoin going around into the future. And you can see this through the most recent two bull markets, right? Having happened in 2017, we see a bull run up to 20,000. Having happened in 2021, we see a run up to 69,000 towards the peak. And then we're heading into a halving in 2024. The question that everyone is asking is, where does price lead for Bitcoin? And by extension, because crypto follows Bitcoin, the remainder of the cryptocurrency market. I see bright futures for many cryptocurrency assets, given some regulatory clarity beginning to emerge from the SEC's lawsuit with XRP and some other cryptocurrencies, but we need to wait for time to validate that thesis here. So that's on Morgan Stanley. Now, along these same lines, I think people are beginning to be cognizant to the fact that the Bitcoin halving is slowly approaching us. And due to that, people like, in this case, Billy Bambro from Forbes, digital assets section, I guess, says this is quote unquote not priced in. A quote unquote huge shift just happened that's about to blow up Bitcoin, Ethereum, XRP, and the cryptocurrency market. And it looks like they're still talking about the spot ETF approval here by the SEC. So we have a number of institutions like BlackRock, Fidelity, Morgan Stanley, ARK Invest, Vanguard. Basically, everyone wants to get their hands on a Bitcoin spot ETF, and all of them have submitted approvals to the SEC to actually release the product. The argument that they're making, which I've been really hammering on for these past 2 weeks here, is that the price increases that could be potentially caused by a spot ETF approval by the SEC have not been priced into the markets yet. When we're thinking about institutional investors, we need to broaden our scope of thought from the capital that you or I or any other retail investor would have and multiply that by tens, hundreds, and thousands of millions. When an institutional investor generates a spot ETF, unlike a futures ETF, they actually need to buy into the underlying asset so that when people buy into the fund, they actually have true exposure, not a derivatives contract, do whatever they think they're buying. And when we're thinking about institutional levels of funds, we're not talking about $100,000 or tens of thousands of dollars. We're talking about millions, if not billions of dollars being directly bought into Bitcoin. Going back into our earlier conversation about how Bitcoin's price increases, well, if our supply of future Bitcoin is about to get halved, our current demand is consistent, and then we have an unknown but certainly extremely large level of inflowing demand coming should an approval occur. Is it not possible to see $100,000 Bitcoin? Is it not possible to see a $200,000 Bitcoin? These are the things that I'm considering when I think about the potential for returns into the space, because we have really big money coming into the industry. And when they start to buy the Bitcoin, there's only so much in circulation to buy. That must increase price. This isn't about what I think about the chain. This isn't about what I think about the industry. This isn't me just speculating because I like crypto. This is just Econ 101, the same kind of stuff that you'd learn in high school and college. When there's more demand than there is supply, there will be an increase in price. And we have never seen the level of demand that is going to come from the approval of a spot ETF. And that's what Forbes is talking about here. Right things for the future. Warren Buffett, he still hates crypto, but he's a boomer, so forget about him. I'm just kidding. No, just to pin a comment on Warren Buffett here. One of the greatest investors of all time. He is a true bottoms-up fundamental investor, buys high-quality assets, holds them for the long term, set the tone for a generation of investments. And I think that, following his strategy is one that I do in my own personal equity portfolio, one that in theory I'm doing for my crypto portfolio. And he definitely has some really interesting thoughts into the market. Candidly, do I think there may be better investors or traders than Warren Buffett? Of course, but there's something to be said about consistency and sticking to a strategy in the same way that he has throughout his investment career, which is admirable, and I think it's something that we should model for ourselves as well. So kudos to Warren Buffett, the OG, the GOAT. So, looks like we have some tough regulations coming out in the UK. Tougher UK crypto regime sparks boom for compliance advisors. The UK's increasingly tough regulatory regime for cryptocurrencies has sparked a cottage industry for advice and compliance for the handful of companies that have successfully navigated the system. Demand for help from crypto companies globally to deal with British rules has risen this month after the financial regulator banned unauthorized firms from marketing to UK customers. In the past 2 weeks, some of the largest crypto service providers, including exchanges Binance and Huobi, have fallen foul of tougher standards, which are designed to strengthen consumer protections after last year's crypto market crash and failure of companies such as FTX. Looks like in the first week after the new regime, the Financial Conduct Authority issued more than 150 alerts on unauthorized crypto groups' promotions. Failure to comply with the rules, which apply globally, can lead to fines or imprisonment. So, this is one of the benefits that I see of higher regulation for financial services in general, but cryptocurrency especially. When you have a new and emerging asset class, you can think of it as a bit of a Wild West where you can do anything and that anything can be good or bad. And when you have the potential for massive outsized returns, but unclear regulations and unclear knowledge about the underlying protocols that people can buy into, there is a high chance and propensity for scam artists and malfeasance to actually hurt people and take their funds. One of the benefits that I see about increased regulation is that while it may not mitigate some of the scams that are happening, because this certainly happens into the public markets all the time, it'll at least give people the potential to get themselves out of a bad situation. For people that aren't abiding by regulation, for people that aren't giving proper disclosure, for people that are truly engaging in rug pulls and pump and the dumps and all these things that are going to hurt consumers, this is actually one way to actually mitigate these concerns. And for all the companies here in the UK that are helping crypto companies be compliant, follow by the rules, and play the right game, I'm fully supportive of that, and I think that's a good thing. Binance is definitely on the watch though, so some looming thoughts about whether I should still use the platform. Candidly, I think if the rest of the world agrees with Binance, it looks like the US and UK regulators just really need to set some clear guidelines, and then perhaps Binance and my friend CZ will abide by them. But until then, I will stay on Binance. Now, to close out the article, thinking about traditional financial services, let's talk about how blockchain, not crypto, but the underlying technology of cryptocurrency, is actually changing the financial sector. Like I've been hammering on about, I think cryptocurrency is the 13th asset class. It is going to fundamentally change the way we think about transacting with money, the way we store value for ourselves, and the way we store and send value to our friends, colleagues, and counterparties. I mean, at this time, Masters told Bloomberg News you should be taking this technology as seriously as you should have been taking the development of the internet in the early 1990s. I completely agree with this assessment. There are features of centralized finance which are not good for consumers. There's centralization being number one. I think over the past 5 years, with some of the geopolitical uncertainty and internal political uncertainty we've had in the US, financial institutions like JPMorgan Chase, Morgan Stanley, Bank of America, and even some fintechs shutting off access for people to use financial services is one example of the negative effects of centralization. For you to be able to transact and operate freely in this economy, you need to be able to do the same with your money. And one of the benefits of cryptocurrency is that it is not centralized, that you have autonomy to do what you want with your funds. You can store it how you like, you can send it how you like, you can use it how you like, you can transact at any time that you like. No one needs to approve it. And of course, when you have something that is unregulated or uncontrolled, you can have the potential for bad actors to use the platforms. You can think of Hamas recently with the Israel-Gaza-Palestine conflict, right? Using cryptocurrencies such as Bitcoin to fundraise. I don't think this is good, but at least in my take, these fundraising activities, these malfeasance, would have done so in the traditional financial sector or cryptocurrency. Cryptocurrency just happened to be the better place to do it. Is there work that we can do to perhaps claw back some of the funds that they've received? Is there work that we can do to make it harder for bad actors to use these platforms? Of course, and I think that's why there's potential benefits to centralized exchanges being able to be gatekeepers for who can engage in certain types of economies, right? If you want to use a certain platform to buy and send value, well, then you have to follow their rules. And if those rules happen to be subject to a regulator's authority, one that actually put up regulations, hopefully thoughtful, nuanced, and balanced regulations to protect consumers, then to me, that's not a bad thing. And if people want to use the more technological, more decentralized, less secured methods of a decentralized exchange to buy and sell and transact, then that should also be their right, because I think at the end of the day, as a libertarian myself, people should not be in control of your money. You should be in control of yourself. You should be able to buy when you'd like to, sell when you'd like to, and send whom you'd like to at any time that you would like to. And that's one of the great benefits that I see of cryptocurrency. And this is just one of the benefits. We haven't even talked about security, speed of exchange, processing, smart contracts, layer 2 solutions, interoperability, many of the other very cool things that are happening in the cryptocurrency space, many of which are happening in this portfolio here. So on that note, guys, I am going to get ready for the gym because I'm going to be late. I got 14 minutes to run over there. Good news is it's pretty close, but please continue to do your own research. Just remember, this is not investment advice. This is for solely educational and entertainment purposes. As you head into the day, make sure you are kind to everyone that you interact with. Make sure that you remain open, cognizant, compassionate, and understanding. And be sure, as we continue to stack our sats and respective altcoins, that you turn your rags into riches. Let's make something happen today, and I will see you all maybe tomorrow, but I'll see you soon.